Italian residency by investment program requires you to either invest 2 million euros into Italian public debt or 1 million into a philanthropical activity, 500,000 into a private LTD, or 250,000 into a startup. By the way, since 2020, those levels were reduced because the startup and the private limited company were doubled. So if you get the Italian investment residency program, you are awarded a visa and you are not required to stay in Italy. So you don't have a minimum stay period. And this means you can get the visa, never touch soil into Italy, never set your foot in Italy, never pay tax to Italy, and you can move freely into the whole EU Schengen area. Now, if you think about how to do that, there are a few things you must be aware of. So first of all, the easiest route is to put 2 millions into the Italian public debt. But this raises two concerns. First, you need to have 2 millions. Second, Italian public debt is not junk debt. However, the outlook doesn't look that fine. So the other option is to put 1 million to a philanthropical activity, but I rather focus on the other two requirements. A, invest 500,000 into an LTD or 250,000 into an innovative startup. And this raises different concerns. So everybody is concerned about the fact that they invest money into a private company and they can potentially go bankrupt and lose all the money. So this is a big concern. However, people don't think about two different strategies. The first strategy is that you can set up your own company. So nobody says that you have to invest your money into somebody else's entity. You can create your own and put your money in that. And by the way, this can be done while requesting the application for the Italian investment residency program, because you have a pre-application in which you fill in your personal information and what type of investment you intend to make. Once you get the pre-approval, you invest the money the way you prefer, and upon getting a receipt of that and showing proof that you invested that money, you can finally get the visa. But think about that. You put your money, you transfer from your personal funds into a box controlled by yourself, that you use it to retain your residency. So in this way, you can still manage your money without having the concern and the hassle of somebody else's potentially going bankrupt with that money. But my favorite strategy is definitely with the innovative startup. And here people get it totally wrong, because they always think I invest into a startup and then it goes bankrupt. It's very easy that a startup fails. That's the norm. Very few startups succeed, many of those fails. So how do you protect against that? Well, the first option is set up your own. And by the way, setting up a startup is easier than setting up a regular company, because the startup, you only need an Italian digital signature you can request online. You sign the Articles of Incorporation and the Memorandum of Association, and you do it at the Chamber of Commerce, pay 200 euros, digitally sign the papers. You're not required to be in Italy, you're not required to witness a notary deed, and finally, you are not required to provide anyone with a power of attorney and going through back and forth of papers. This is much faster. So meanwhile, you get the pre-approval, you set up the innovative startup. And by the way, how do you qualify for that? Well, there are three ways. A, you hire 2/3 of the workforce must have a master's degree or higher, or 15% of the highest between revenues and costs must be invested into research and development, R&D, or you have an ownership of proprietary intellectual knowledge. So I always prefer option 3. So the proprietary knowledge, you have some simple code that you need to register to an Italian authority. Once you get the paper back, you can be an innovative startup. And by the way, as long as you own that piece of code, the innovative startup status remains. So how hard is to get that? It's very easy. Basically, a programmer with basic knowledge can run a satisfactory software to be registered on the company's name. And you don't need to have that in your hand whenever you apply. You have 1 year to submit your application and therefore to satisfy one of the required criteria. So once you've done that, you get the pre-approval, you put 250,000 into your own company. And you can do that setting up an online bank account with remote bank system. They don't have a physical presence in Italy. You justified at 250K and now you secured your investment visa. And with that visa, you can fly to Italy and or not. You can even go to France or Germany, but you can step into the Schengen area. And in the meantime, you retain your money into the company. And by the way, an investment into your own company, if it's an innovative startup, carries out a 50% tax credit. So if you invest 250,000, you get 125,000 euros of taxes back. And this is fantastic because if you get Italian tax residency and your tax bill is 125,000 euros or lower, you do not pay any tax in Italy because you invested into an innovative startup. Or the alternative option is to write a notary deed saying that you decide to invest the money into an innovative startup or a regular LTD, but this is assigned to a specific project. And the rationale behind that is that if the company goes bankrupt, this is a capital segregation. Creditors cannot take your money. Creditors cannot put the money on your investment because that was assigned to a specific project and it's segregated from the overall capital of the company. So this cannot satisfy the creditors' needs in case the managing directors go through bankruptcy. And another good point of innovative startup is that they cannot get bankrupt. They cannot be declared bankrupt by the law. They can simply get too many debts, they can pay it off, and by the way, the managing directors cannot be prosecuted for wrongful or fraudulent trading, and the shareholders only risk the money they put in the company as well as the managing directors, which if you think that's the principle of the LTD, well, it is until you go bankrupt and somebody says that you've been doing that on purpose, which can be quite easy in Italy. So if you want to protect your own investment and secure your visa, I suggest you to use one of these two options. A, set up your own company, or B, provide a capital segregation. And as long as you retain that money into a company, well, your visa is secured.